Perspectives by AirInsight. I think this one is lucky number 13 in our series. And we're going to speak about the airlines coming out of COVID-19 and what's happening within the airline industry. Today, we've got an opportunity to hear some experts' perspective on the airlines, assess the impact of the airline recovery on the supply chain, OEMs, and others. Ask questions of the panel. We'll have a Q&A session where we ask you to use the chat function to submit questions, and you can submit those questions anytime during the process via chat, so you don't lose that question if it's important, and also promote some discussion about the future of airlines as we emerge from this COVID crisis, and hopefully don't have a second wave. We've got a great panel today, starting with Bob Mann, who's an independent airline analyst and consultant who's been doing that for about as long as I have, which is which we don't like to admit, but it's been he's had an interesting career at American, Pan Am, TWA. He's been a corporate officer. He's served on a couple of interesting boards, particularly in the reservation systems area and revenue management. He's been at MIT, holds a couple of degrees from MIT, and was at their flight transport laboratory. So welcome, Bob. We have Ben Baldanza. Ben is the CEO of Spirit, creating really a new sector for the U.S. airline industry in the ULCC category. He's been around multiple airlines. Remember from U.S. Airways, Continental, TACA Group, also American and Northwest earlier in his career. Today, Ben has an advisory firm, degrees from Syracuse and Princeton, and teaches economics at George Mason. So welcome, Ben. Thanks for being with us. We also have John Heimlich, who is Vice President and Chief Economist for Airlines for America. John is a distinguished analyst. Prior to A4A, has spent years with United Airlines in planning. He's a graduate of Cornell and Harvard. Very bright guy, and one who we're eager to hear from. And we'll get started in just a moment here. We'll start with John. Can you give an introduction and a brief as to where you think the industry is at and where we're headed as we try to come out of COVID-19?
Sure. Everyone hearing me okay now?
Yep.
Okay, good. Thanks for the intro, Ernie. Definitely a pleasure to be on the panel with Bob and Ben. You know, let's just say March was absolutely brutal, just for me personally at work and obviously for the industry. Spent many long frenetic hours to try to stem the hemorrhaging. And you know, a lot of people, of course, focus on the passage of the CARES Act, which was the cornerstone of stabilizing the situation and securing protections for the workforce and providing a bridge to a more stable period, hopefully, of demand come this fall. Although we still anticipate that volumes this fall, let's call it fourth quarter, maybe 40 to 60% below year-ago levels, and we expect this to be at least a 3-year recovery, perhaps more, with domestic coming first, then international, with VFR and recreational coming first, and then corporate. So the revenue recovery will lag the traffic recovery, and that's an important thing to consider as carriers work on all the things they have the most control of on the cost side of the ledger, and that they will, even when they return to break even, from a cash basis, they will be working several years to burn off the debt. That will be a priority for any free cash flow they generate, which will take away from other investments. Now, fortunately, for a while, they won't need as many aircraft, and they will have fewer fleet types, and that will provide a benefit. So the other thing they can, and they've spent a lot of, they already have a lot of deliveries either they've taken or planned over the next 3 years that are already financed and in the order book. So I don't think lack of free cash flow to acquire equipment is going to be too much of a concern. Same thing with airport renovations, and a lot of money already in that pipeline. So, you know, everything right now, people ask for a forecast. And I say, well, if you can give me, you know, an epidemiological forecast, I'll give you an economic forecast. And, you know, there's more acknowledgement, blue and red now, of the prospect of a second wave, third wave, and that's frightening. So I don't think this is necessarily a linear recovery. Either way, it's very, very gradual, and airlines going to need to take a super cautious approach to it. And I think with that, I'll pass it on to the next panelist and look forward to the discussion and the questions.
Sounds great. Ben, your thoughts as we hear John and find about the industry.
Well, thank you. And thank you to all listening in today. Hope we can all be helpful to you. My sense is that there's a couple dimensions to think about in airline recovery. There's certainly the intent of travel. People visiting family, people traveling on vacation, businesses sending employees out to work. And each of those have different dynamics in terms of when certain things open. I mean, it doesn't really make much sense for a family to fly to Orlando if Disney isn't open, for example, right? Or to fly to Cancun if you can't go diving and eat at a nice restaurant. And so some of the leisure demand is going to be a function of how other things are opening to where you can go. Businesses are going to, in some ways, want to get people back out on the road to get their own revenues and sales going, probably to inspect facilities and plants that maybe be behind in that. On the other hand, there's some activities that businesses will say, we don't need to pay for air travel anymore because video has been working just fine. So there's some piece of business that may not come back. I also think there's a length of haul dimension. Under almost any view of demand recovery, my sense is that people will be comfortable flying a 1 to 3 hour flight sooner than they will be comfortable flying a 12 to 15 hour flight. And so that has implications for longer haul airlines like an Emirates or a British Airways or something. So I think there's a lot to think about it. If I could sum it all up in terms of demand, I think airlines have a one-word business plan, and that's confidence. How do you get customers confident that they can be safe in the airport, safe on the airplane, and be able to go do whatever reason they're traveling for safely? And I've traveled a bit in the last few weeks and have seen what's happening in the airports and the airlines, and I've seen mixed results actually in terms of, you know, people adhering to PPE standards and others. I like what the industry is saying. I like what the industry is doing about asking all customers to wear masks, and the recent sort of upgauge on enforcement on that, I think, is really encouraging. So overall, when customers are confident they can be safe, we'll see a return to travel. I think families will travel before business. I think business will travel a little bit before leisure. But I'm hoping that if we see some return to business by the fourth quarter, we could potentially see some strength in leisure for summer 2021.
Great, thank you, Ben. Bob, your initial thoughts.
Well, again, thanks to the organizers and thanks to the participants and the audience. I guess I'd have to echo both John's and Ben's comments, which is to say it's clearly a lower for longer sort of recovery. I think I did my first briefing on this on about March 6th, just after some of the first corporate duty of care travel bans were put in place, and it was unclear what the industry was yet going to face. It was unclear what sort of a demand desert would appear, the extent of it, the duration of it, the shape of the recovery. But I think all things that we're seeing so far, and all the survey data that we see of not only the general public, but of people who previously flew frequently, is that there is a genuine concern and lack of confidence in the ability to conduct an end-to-end journey, which would allow them to be safe and secure not only in the air travel component, but in the entire, door-to-door length of the itinerary. So I think the key issues there are exactly as suggested. We need a kind of an industry-wide, not just airlines, but hospitality, meetings and conventions, public transport, and essentially that door-to-door approach on building confidence. And whether that needs to be a feature of whether that needs to be a feature of government, or whether it needs to be a feature of a multi-industry approach, I'll leave that to the agencies. But I think what we're clearly seeing is whatever problems the industry sees today, they're going to get magnified significantly come October, when the initial subsidies from CARES Act expire, and when the summer travel boomlet, which is this summer's 2020, price stimulated demand recovery to 25% of normal, expires. So we're going to see a reliance on return of corporate travel, which I hope does start to reappear. But I do have concerns about it in view of some of the resurgence in outbreaks in some of the early opening regions of this country. And then, of course, beyond domestic and beyond leisure, business and international. And international, that's a business, that's a government to government issue, where we're still looking at imposing both quarantines and or just simply eliminating travel options, such as is occurring in China. So I think the key issue there is we really need to look at this as a long-term proposition, probably not a 30 or 40% return by the end of this year, and probably not a full return for at least 3 years.
Wow.
Well, thanks, Bob. We appreciate your commentary. First question for the panel. Go ahead.
Just to remind the audience, if you have questions, please use the chat feature at the bottom of your screen to enter your questions so that Ernie and I will see them and then pose those to the panel. Go ahead, Ernie.
Oh, we've had some response on this question already, but to get a specific answer, how long will the recovery take, in your opinion, and which areas of commercial aviation will be the first and last for demand to return? John, we can start with you on that.
Yeah. So one dimension to that, first, there's passenger versus cargo. The other thing to say is, there's volume, there's revenue, and there's profitability. And even beyond that, there's balance sheet strength. So they will all recover on a different timeline, probably sequentially, as I just laid them out. Traffic, then revenue, then profitability, then balance sheet health, creditworthiness. And every airline, every US airline has been downgraded by all three ratings agencies, some couple notches. And that is part, so one is answering, choosing which metric by which you define recovery. I think for revenue, for sure, it's at least 3 years. And I think we should look back, while this crisis is certainly, I think, more profound than past ones. We can at least recall what happened after 9/11, which was 3.5 to 4 years for revenue to fully return to its pre-crisis level, and more like 7 years after the global financial crisis and subsequent oil spike. That was kind of a 1-2 punch. So if it's revenue, then, I think 3 to 5 years, and we're going to have a smaller footprint. We might not even have a footprint that is poised to capture as much revenue right away as we did pre-COVID. We might have several fewer airplanes, and we might have fewer wide bodies. So we'll see. The second part was the sequence of the type of demand that returns, and that's very related to the revenue recovery, which is, I think, that high quality traffic returns last. Now, I think Ben had a slightly different sequence in mind than I did, because he said business and then leisure. I think it's nuanced. I mean, I think it sounds like there's a consensus that VFR, visiting friends and relatives, tends to come first. And I think there's probably a distinction between small business and big business. I think corporate, and especially corporate long haul, to Ben's point, is later. There will be a reluctance from an HR perspective and a budgetary perspective, to put people on airplanes and hotels and restaurants, send them out. It's an HR concern, it's a legal liability concern, and it's a budgetary concern. You know, corporations cut travel and entertainment and hiring first. It's one of the last things they restore. And there's one last point on this before I hand it over, which is, we all know it's one thing to say we're going to fly again, but there are two other dimensions. How many times a year and in what cabin? So if I'm sitting in economy or premium economy instead of business or first, then that's something that the airlines need to be cognizant of. So I'll stop the remarks and hand it over to another panelist.
Ben, your thoughts on the same topic? Oops, we need to unmute Ben.
He's on. Can't hear you, Ben.
We can't.
Can't hear you,
We're
Ben.
not hearing you.
Mute.
Ah, how is that? Is that better?
Much
Now I
better.
can hear you.
Okay, I'm very sorry about that. John, I actually think you and I agree more than even though you're right, I did say VFR business leisure. The reason I said that is, you know, airlines work on a booking curve, of course. And for the fourth quarter, for fourth quarter travel, that means the airlines are going to need to see robust bookings in the September timeframe. And the fourth quarter is traditionally not a big leisure quarter, other than the end of year holidays, of course. So fourth quarter tends to be a business dominated quarter for the industry. So my sense is not necessarily that businesses will want to travel before leisure, but businesses which would normally travel some in the fourth quarter may see some reason to send some people out. Now, I certainly don't expect this to be a strong fourth quarter, nothing like a good comp versus last year or anything. But the question is whether we see some travel in the fourth quarter for businesses, for companies who do want to get those plant inspections done, move some of the sales initiatives forward and things like that. And that the next real time for leisure to show its strength would really be in the spring and summer of next year, even though people might want to go after a summer of having all their vacations canceled. I think there'll be demand for people saying, I want to get out, but the next realistic time is I got to see whether my kids are going to go back to school or not, right?
That's fair.
That's right.
Exactly. Now, Bob, your thoughts on this?
Well, I mean, I think what we see this summer so far is we're so far away from the normal sweet spot in which revenue management systems operate, you know, both from a capacity and demand side, that you see a lot of price discovery going on in what should be normally be a peak summer period. So the $49 fare, succeeded by the $39 fare, which was launched today by Southwest for the fall, is really an element to see, you know, if there is in fact a price elasticity with respect to personal safety traveling in this current environment. So I think the question for the fall will be, compared to the rather rosy capacity projections which are out there right now, how many of them survive Labor Day? How many of them survive what will probably be significant capacity and infrastructure cuts when the CARES Act expires? And then do we really see the corporate travel return to any extent after seeing what occurs this summer with various mask mandates versus optionality, how comfortable the leisure customer felt flying this summer and what they report back in terms of word of mouth and their level of confidence going into the fall.
If I could just tag up on that, and this circles back to a point Ben made in his opening about if Disney's not open, you know, there's no place to go. You don't get on an airplane just for the ride. That's true of, just thinking about what Bob said, that's true of business too. If the conference or business meeting is postponed or canceled, that's not going to happen. So, you know, there are a lot of events for this fall that I suspect have already been moved or canceled, or even if they go ahead, you know, will they have the same attendance? I'm supposed to go to London for some insurance related business meetings in early October. I don't know if that meeting is happening. You know, even like 5K races are being canceled, right, in October already. So I know people who are, they say they're hesitant to buy tickets for their grandparents to fly over Christmas as of now, unless there's a vaccine. So, you know, people are making decisions now about fall and winter events. So to the extent that those events do have lead time, even if for business they would book close in, the event might be deferred far out. That's the point. And if there's no event, there's no flight.
Thank you. One of the questions is what needs to change operationally. We talked about confidence before, but in terms of the reality of the airline on the ground, there's pilots. We've gone from a shortage of pilots to now what seems to be an excess of pilots. But if you're an airline, how do you keep all these people current? How do you keep them on the payroll past the end of the CARES Act? And where do we go in that regard as an airline if demand doesn't come back in time? Ben, why don't you start us out on that one?
Well, sure. I mean, clearly the operations of an airline are going to be a function of how much capacity they can put back in, right? If you look right now, you see sort of Allegiant in the US is probably flying the most capacity relative to what they flew last year at this time. And then, you know, up at about close to 70 or 80% of what they flew last year. But obviously they're a highly variable cost airline. And then at the other end, you see carriers that are only flying maybe 20 to 30% of what they were flying domestically, I'm talking about. Obviously, the long-haul international is down much more than that, but domestically. And so depending on the amount of flying, whether you can rotate all the crews in to keep everyone current is probably right now not a huge issue. But what it means is that everybody's working fewer hours. Now, many contracts in the industry offer minimum hour guarantees and things like that. So when the CARES Act money does run out, it is going to put some airlines in a tough position of, do we keep employment up, or do we offer early outs or let some people go or something like that? But that's going to be tough. There are airlines, you know, like Southwest and others who don't like to do that and who haven't done that. There are also those who are strong in liquidity right now, who might see this as an opportunity to win some share and to say, look, we will push, we have good liquidity, maybe we have a little lower costs than our competitor, so maybe we can push some of the capacity and maybe win some business that we wouldn't have otherwise won, and emerge maybe stronger in a relative set, even though no one's going to be stronger than they were for a long while. On a relative basis, some players could decide we're going to improve our relative positioning. I think you'll see an increase in turn times due to cleaning standards and what should be slower boarding of airplanes if people behave and allow distancing and getting off an airplane and things like that. And so I think you will likely see some extension of that, which might reduce utilization of the fleet. In a time when the whole fleet's not flying, that's not really an efficiency loss. You don't really talk about that as a loss until the whole fleet's flying, and you're going to miss some flights if you do that. But in the meantime, I think you'll see lengthening of turn times, little longer boarding and deplaning as airlines sort of enforce the distancing rules and customers understand that and comply with that, meet the cleaning standards, and then think about how do we keep everyone employed even if they're working fewer hours.
Well, thanks, Ben. Bob, your thoughts on that?
Well, I think if we're really lucky, we'll come to a point where there will be a contention between how much capacity is offered and how much demand there is, and what that creates in terms of onboard load factors. And there's probably a good way of handling that that would both allow carriers to self-help and continue the viability of the networks to provide not only strong transportation infrastructure, but strong public health infrastructure and maintain employment. And that might be some version of essentially a social distancing subsidy, if you want to call it, which would essentially maintain that middle seat empty, maintain an aisle seat empty on a regional 2x2 aircraft, and continue to give the industry an incentive to fly without incurring some of the cash burn which would otherwise occur. Now, the second thing I'd point out is, as this industry recovers, and because of the additional debt that's been incurred, as John pointed out and Ben pointed out, it's going to be absolutely essential that whatever operations are conducted, even with the new costs of sanitization and social distancing, that those operations be absolutely as efficient as possible in returns, in a financial sense, and in a utility sense for customers who are going to have to be weaned off of Zoom if they're a business customer, or maybe brought back from business aviation if they were a customer who was a high time value individual who, because of safety concerns or privacy concerns, went off and started to use the corporate jet. So making sure that this resurgent industry is as efficient as possible, creates the financial returns, and allows those generation of those cash flows to pay down what is now just a hideous amount of additional debt.
Thanks, Bob. John, your thoughts?
It looks like, Ben, did you want to respond? It looks like you had your finger up to respond or something.
Well, I had a reaction to what Bob said, if okay. First of all, I think the middle seat argument is a convenient one, but isn't really right. I mean, the middle seat, if it's empty, I'm still only 18 inches from the person across the aisle from me, and way less than 6 feet from people in front of behind me. So I like to have an empty middle seat when I'm in an aisle or window too, but I don't think that's really a social distancing thing. I think encouraging everyone and enforcing everyone to wear masks on the plane is a much more practical solution and a much more economically feasible solution overall. And so yeah, that's just what I wanted to react to, because I thought that was important.
All right, so I swear this was not planned, but Ben just made my answer a lot easier. Yeah, I mean, look, we believe, just whether it's security or safety or health, we believe multiple layers of protection is the right way to go. And I agree, there's really no such thing as distancing on an aircraft, because people in front of you, behind you, and you're not 6 feet away just because the middle seat is open. It makes sense now. It gives people some more confidence, but we think masks, temperature checks, sanitization, vertical airflow, HEPA filtration, all those things are much, much more important. In fact, the vertical airflow is probably perhaps the most important of all those. And I think with the exception of possibly some of the old 717s, I think everyone has the HEPA hospital grade filters. Just to give you some data point on it, a couple analysts I've spoken with, equity analysts, have their break-even load factor projections for fourth quarter of this year still above 80%. So, to Bob's point about some sort of, break-even subsidy or differential, I mean, probably be material. And I don't think that's probably in the cards. And look, that doesn't mean it suddenly goes down to 65% on January 1st either, especially if there's going to be downward pressure on yields. If fuel prices come back up, if the average fare goes down, then the break-even is going to go up. So we will see. Now clearly we're making progress in getting those sort of fixed costs or 1 year type 6 month to 1 year cost down. But yeah, I agree on the point about turn times. I think one thing that wasn't mentioned maybe is, and this is probably good news, is one, with all the simplification of fleet types, subfleets. There's a nice simplification to maintenance and improvements probably in aircraft reliability, fuel efficiency, in crew scheduling. So I think an aircraft substitution in an irregular operation. So those are all good. The other thing is a redoubling of efforts related to automation, touchless contact, app functionality, biometrics, perhaps by government agencies, anything to minimize contact with something human or non-human, I think is now taken that much more seriously because of all the confidence issues and all the desire to, I mean, if we're going to space people out in queues, you have to somehow offset that with some other type of productivity enhancement. TSA credential authentication technology that they were already, working on, perhaps custom. So all these things I think get a boost out of this. And I mean, every week I get an airline alert about some enhanced functionality on the app using your vouchers in a different way, and all these things I think are going to become more important.
Yeah, I would just point out that the most dangerous thing now may be the armrest you share, in which of course you can't avoid touching your face after you share it. So that's really the single biggest issue behind the middle seat. Of course, if you choose to travel with someone, you can always sit next to them and leave the other seat unoccupied. So the key issue is just that shared armrest, which we all love.
Yeah. Thanks, guys. We've come to past half of the hour. We've got 6 or 7 questions on there. So I'm going to turn it over to Addison to take us into a bit of a Q&A session here. And Addison, if you can get the audience questions.
First question we have here for the panel: how are airlines dealing with debt?
Sadly, they are.
They're issuing it as fast as they can.
Yeah, I mean, including deals. Well, it's not all debt, but it's mostly debt. Including deals announced in the last few days that are underway. On the U.S. passenger side alone, I'm somewhere at $47 billion tally since February 26th. And that I use that date because that was sort of when the Trans-Pacific stuff was really hitting. On the cargo side, it's about $8 billion. Now, on the cargo side, some of that was commercial paper. On the airline side, some of that is stock sales and aircraft sale leaseback transactions, but it's overwhelmingly debt, whether it's secured or unsecured. And the good news is, and this was, the subtle part of the CARES Act and the tremendous actions of the Federal Reserve to pump liquidity in the economy, is that it reassured the capital markets, and it made sure the private market stayed open to the carriers, and it stabilized things. So they have been exhausting every means, and several have applied for the CARES Act loan program, and that's still to be determined what the awards are and whether or not the airlines choose to accept them. And I believe they have till September 30th to make that decision, whether to accept them at those terms. There's no question. I mean, Southwest has been the most aggressive in adding liquidity, something like $14 billion added since that period. So they have a long cash runway, but they'll want to work through it, and they'll want to repair their balance sheet. So how are they dealing with it? They're dealing with it by necessity, taking on far more than they'd like to, but it is the only way in an extremely uncertain period of demand to ensure your longevity. And by the way, some of the deals where some of that $47 billion itself is going to refinance other debt that's already on the book. So it's to serve the debt under new terms. And I think they just need to acknowledge it's going to be around a few years.
Anyone else have a thought? I can go to the next question otherwise.
I have one quick thought that I don't want to extend this particular issue because John addressed it perfectly, I think. But right now, obviously, with the uncertainty of demand and the uncertainty of how long this really is going to be. Is there going to be travel this fall? Is it not going to be till 2023? Right now, cash is absolutely king. So any airline with smart management is going to take on debt with anything close to, reasonable terms with a small r, rather than put the risk in that they don't have the cash that they may need. And probably better to deal with debt down the road than to run out of liquidity in the next 12 to 18 months.
I would agree. You don't want liquidity issue to become a solvency issue, but when you look at an issue that came up this morning, 12% coupon junk bond, 5-year, that's not even a small r reasonable.
Yeah. Just to put one other piece of historical color on it, I think there used to be a thought, 10 to 15% of your annual revenues roughly as a guide of how much cash you should have on the balance sheet. And also, after 9/11, some of the large carriers said we need to withstand something twice the magnitude of 9/11. Well, this was 5 to 6 times the impact of 9/11, not 2 times. And so now I think the new rule going forward will be something like 20 to 25%. And right now, for some carriers, it's 40 to 50%. So yeah, it's ensuring longevity, even though it's ugly, and even though that debt service will be a drag on other uses. But there's no point in formulating a business model if you're not in business.
The next question applies to not necessarily the US, but the question goes like this: with long haul expected to recover in only 3 to 4 years, how can airlines dependent on this ever survive? Look at Cathay, Qantas, Singapore. We've got this thing about the travel bubble. Well, that's not happening very quickly. Even New Zealand and Australia hasn't happened yet, and they were the first to talk about it. What happens to long haul carriers? The sound is deafening.
Look, the recovery is not uniform geographically, right? So, what Qantas's exposure versus Cathay's versus United's and LATAM is all different. Look how many bankruptcies we've had in Latin America. Long haul generally is difficult. Also, the markets they serve, to go back to Bob's earlier point about the governmental restrictions are not uniform. Some countries have been much more aggressive in restrictions as well as quarantines. I think New Zealand was one of the most aggressive. UK, I think, is still under a 14-day quarantine for arriving passengers. And if you're heavy in those markets, you've got a tougher haul. And then, of course, there's the conditions of your economy. I think the World Bank a week or two ago said quite an inordinate number of economies are currently in recession. So that's also a consideration. But look, you have to adapt your business model accordingly. The other thing is, let's just call a spade a spade. Many of those carriers have received state aid. They've gone to, South African Airways. Look at Lufthansa is having the discussion. I think Thai Airways is getting state aid. So a lot of these long haul carriers, it's certainly not just in the U.S., are dealing with that partly with help of the government. But they will also have to think about their fleets and their business models. And some of those long haul markets aren't going to come back soon. So they have to retool. And by the way, they've also divested some of their investments. So was it Qantas that just divested Jetstar? I think yes. Vietnam. So, okay. So, they're raising cash. They're getting out of certain joint ventures. It's all part of the discussion. But my colleagues can probably speak more to that than I can.
Well, and the long haul wide body airplanes have the biggest risk for any airline, right? They're expensive to own, they're expensive to lease, they're expensive to operate, and they need to be profitable a good portion of the year to justify even owning the airplane. So you've seen Delta, for example, now say it's retiring all its 777s. You've seen Air France saying it's getting out of its A380s. I expect this could mean an earlier death of the A380. I mean, we knew that Airbus was no longer going to produce the plane, but I think once Emirates decides we don't, we see the sunset for that airplane, that's going to be a big issue. And it really comes down, like John said, to every airline is a little different, and who has a shorter haul network that they can live on for a while to support maybe a piece of their wide body fleet. If the whole fleet is long haul wide body, that airline without state aid is in real trouble. And maybe there's enough state aid to help them. But an airline like an American, for example, which has a lot of wide bodies, but also has a robust domestic network, can live on their domestic network a little bit, probably make some fleet changes. But I would bet over time, narrow bodies outsell wide bodies all the time anyway. And I bet that ratio is just going to get bigger for a while in favor of the narrow body.
Next question. What is the outlook for commercial aircraft leasing companies? Bob, how about you having a crack at that one?
Rocky? I think the reality is they're probably all looking for homes for equipment that, even if it hasn't been turned back to them already, may ultimately be turned back, and it's a buyer's market at this point, not a lessor's market. So I think it's going to be a tough couple of years.
Next question. What is the outlook for regional airlines in the US and their fleet mix going forward?
I'll pop in there. Well, if you look at US networks, the three network carriers, and I'll throw in Alaska there because they have a regional operation as well. Roughly half the departures domestically were operated by those fee for departure or capacity purchase agreement regionals. And those networks don't work without the participation of those carriers. So there'll be some changes around the edges of what ratio of mainline to regional continues to operate, and at what degree they recover. But they're simply not. Those networks simply will not operate independent of each other or without the participation of both size fleet types.
Bob's exactly right about that. And it's hard to leave an empty middle seat when you have no middle seats.
Yeah.
Windows and aisles.
It's funny, something I've observed sort of across the aviation enthusiast or critic spectrum is, no matter what kind of shock happens, one of the first things people say, well, that's the end of the 50-seater, or that's the end of regional. It doesn't matter what happens, that's always the answer. But I think it's a little more nuanced here, and I agree with what's been said. But and again, nothing's permanent, but in a low fuel price, low demand environment, I think that's conducive to holding on to these smaller jets longer, because it is the opposite of the long haul wide body. It's more nimble. You can do a couple frequencies a day, or one in a market that has half the demand that used to be served by an A320, So it's nimble in that regard, and it has the, sort of the labor differential. Now, that also, we have to bring in the realities of pilot scope clauses and look at what United's going through. So, and for those of you who don't know, like United's pilot contract has very strict provisions on how many 76-seaters United's regional partners can operate relative to the number of mainline flights or aircraft. I can't remember the exact terms, but that it has. So, and Andrew Nacella has said on conference calls that indeed we are complying with that, and that we are doing the engineering work now on those 76-seaters now to take 6 seats off, to make sure we're in compliance. So they need to factor that into their retooling. But yeah, I mean, look, we've seen, and by the way, a lot of people ask about bankruptcies, but we did have 4 smaller carriers in the US go out of business, although one is trying to restart. That's Raven Alaska. They got some CARES Act money. Miami Air, which was charter, but Compass and Trans States. Now, they were already hurting financially before this, but COVID was the death knell. And I think that is conducive to consolidation in the regional sector. So, but operationally speaking, you know, United in particular has said, no, we're not, you know, we're not ready to park all these regional aircraft people are speculating about.
We have a bunch of questions here, so I think if the panel, if you want to take a crack at a question, just be curt. We have a great question here. Where could we be wrong? What would have to happen for the recovery to occur sooner than later?
What has to happen is people need to start buying tickets, and airlines have their pulse on the revenue stream. The revenue management pricing teams at airlines are watching bookings probably by the hour. And if there's a sense that people are actually willing to open their wallet to say, I'm going to buy an air trip, they're going to see it as soon as it starts, and the capacity planning team is going to respond with more capacity if and when needed. So it's not like someone's going to wake up and say, wow, are more people traveling? They're going to see it in their numbers long before any of us see it.
Yeah, you know, standards, announcements about the face coverings, the technology, you know, Delta saying we're going to start a global cleanliness division, you know, and all the airlines are doing electrostatic cleaning. But the other thing we're doing individually and as an industry, which is important to get people to buy tickets, is using third-party medical or public health type institutions to validate the suite of measures being taken. And that doesn't mean validate to rubber stamp. That means, are these the right measures? You know, tell us if they are, if they aren't, and if they are, you know, say that. So Alaska working with the University of Washington, United working at the Cleveland Clinic. A4A is having many conversations with the Harvard School of Public Health. So these things are happening. And as you know, people like standards. We very consciously got our carriers to all agree on the announcement about the mandatory face coverings and a step up their enforcement, calling for TSA to do temperature checks. Whether that happens or not, I don't know. But you know, people like standard and uniformity, and the other thing is, of course, something we don't control, which is the development and widespread deployment of a vaccine. That will help immensely with the number of people buying tickets and stopping canceling events. So, and then that will also give people confidence to reopen, you know, casinos in Vegas or theme parks in Florida. So it's not just about the flight itself, to come full circle to the start of this panel. It's the medical side has to progress, and it's a good thing that people are pouring both financial and human capital into that.
Well, I would cash my miles in, some of my miles for a vaccine, that's for sure.
There you go.
Okay, so question here. Turn times increase for the cleaning to is likely to double, which implies significant cost increase as less flight hours per day will be achieved. Furthermore, if the schedule should be maintained, this implies 10% or more aircraft to be paid for. Currently, there is a surplus of aircraft, but also the cost of restart is hugely higher than being parked. How will this be manageable by airlines, which are already hemorrhaging cash with a parked fleet? So a flying fleet with low load factors does what? Will there be more consolidation required to maintain a service level in the US or other places? And the question is actually aimed at John.
Yeah. Well, that was long premise and question. I'm trying to make sure. I mean, I don't think anyone right now is thinking about consolidation. Look, I mean, we talked about the regional sector a little bit. Within 5 years, perhaps, but I don't think anyone has the time to think about it. All the focus right now is on liquidity. I don't think anyone has the financial appetite. I certainly don't think labor has the appetite for anything soon. What I see is just the size of the fleet and workforce responding to the pie of revenue. And I think generally speaking, I mean, airlines have already for the summer, you know, we peaked about 3,200 parked aircraft in mid-May, which was 52% of the fleet. Now we're down to 42% of the fleet, something like 2,600. It is 42% relative to what we started the year with, the active fleet. My point being that airlines are first taking planes out of storage to accommodate that any increase in demand we've had, and they've been careful not to overpark or sort of permanently store or retire too many aircraft because of the problem that the questioner, I think, referred to, which is it is expensive to sort of cut too much and then bring it back from an aircraft management standpoint, but also very importantly from a crew resources management standpoint and training. I think for large airlines, it could take a whole year to get, you know, pilots through their retraining, and there are very large ripple effects of, you know, retraining everyone on different fleet types. So I think caution on overcutting is the best way to manage the cost of recovery. And again, the CARES Act helped avoid the overcutting and gave the airlines a lot of time to do voluntaries, which in some cases they're early outs, but in other cases they allow for recalls from furlough, which is a less painful way. You don't have all the severance costs and things.
Question goes like this. What does the panel think about 2021? Will it be better or worse than 2020? Ben, how about you?
Well,
I think it'll be better than the 12 months from March 1 of this year. Like if you think of sort of when the thing started and you take 12 months from there, I think all of 2020 will be a little better than that. It's not suggesting I think a full recovery in 2021 at all. But I think if I could predict a shape for this, it would be almost be like a Nike swoosh, a very long, slow recovery back. And that suggests to me that the full year of 2021 will be better than the first 12 months of this whole crisis.
Bob?
yeah, I was just simply going to say that January and February would be worse, but hopefully March and onward would be better. But it all ultimately comes down to how we do on either therapeutics or immunizations, and then how business travel responds, because the industry, as it's now constructed, with a few exceptions, really can't operate at its peak on purely speculative leisure demand.
So January and February revenue was up about 5.5% year over year. We were off to another record. Volumes were up, revenue was up.
Yeah.
Even with January and February, we still project that calendar year 20 will be about 50 to 55% below 19 in revenue. Still working off a 2019 baseline. We expect, as of now, best guess 21 on a 2-year comparison basis to be 20 to 25% below 2019. So clearly better than 20, but still at least a quarter worse than 19.
Here's a perennial question, and we've kind of touched on it so far, but given the recovery and how the recovery works, and we've brought up regionals before, in the US, will scope clause be relaxed?
You're not starting with me on that one.
Who wants to touch the live wire? Don't all jump at once.
It's one of the most emotional parts of any pilot contract. Therefore, I expect that any discussions around that would not come without a lot of other discussions.
Okay, so let me frame it a little bit like this. January, February, pilot shortage. From then until now, major surplus. We've seen Delta talk about that they have 7,000 too many pilots. We're talking breathtaking numbers of people pilots that they don't need. American, Delta, United are all offering early outs for people close to retirement to try and ease that. Pilots I've spoken to have said, well, wait a second, the last 5 years of my career are the best years when I can choose the routes, I can choose the schedule, and I make some money. And they've had years of shocks to their careers. So now it makes it very difficult to be a pilot, senior pilot that's being offered an early out. And how do you do that? So the forces that have helped scope, the force that have helped scope to get us so far, now what?
I mean, the last thing I'll say on this is that of all the options that pilots have, the worst one is to say, outsource my job to someone else.
Anybody else want to touch that?
I mean, you know, so another, I don't know if it's sort of choice C here, but, you know, Delta insourced the A220 with mainline Delta pilots. And the A220 is a very interesting plane right now. And, you know, there's not a lot coming out of the regional manufacturers now that's on a smaller end. You know, that's sort of another leg of the stool to attack that issue. If you can get an attractive mainline cost to operate a smaller than usual piece of equipment, you know, maybe that discussion's a little different now, but Ben's absolutely right. I mean, it's a lightning rod, and we know that pre-pandemic, it was a critical piece of United's pilot negotiations. And I also saw, you know, Wolf Research, I think it was, had a pilot panel in its recent conference. They laid down a marker pretty clearly where they stood on that, and hence, you know, for example, the 6 seats being pulled off the 76-seater. So it's a tough one, and I couldn't venture a guess, but I think I think that both sides, to the extent they're sides, and I think right now they're pretty aligned, will find creative ways to address the problem, because it's in their interest to capture as much revenue as they profitably can. And if that involves a different fleet mix, they will. But how it ends up, whether it's technically a scope change, I don't know.
Ernie, that's a wrap. I guess we're on the hour. Back to you.
All right. Thanks, Addison. We wanted to just be sure that if I can get this to work, make sure we get our commercial in here for how AirInsight can help you. We do a lot of work in strategy, market research, competitive intelligence, and forecasting. We're available for consultations, and our contact information is here on the slide. Next week, Michelle Merlizo and I are going to talk about Airbus, its outlook, and the uncertainties facing Airbus in the market. So we invite you to join us back next Tuesday at the same time for a webinar. Those of you who are participating today will automatically get an email invitation. So we look forward to seeing you all next week. Thanks again to our panelists. It was a great panel today. Thanks, Ben, Bob, and John. We really appreciate your being with us. Great insights from all of you, and we look forward to seeing you next week.
Thank you,
Bob. It's great seeing you both too. Thanks.
Thanks.
it's a pleasure. Enjoyed it. Thank you all.